Hey fellow stock guardians, happy Thursday, May 27th, 2021. I'm Hoda, a stock card CEO, reporting to you from a flat stock market. I looked into why the stock market indices stayed relatively flat once again, discussed Boeing's upside potential, and explored whether it's time to buy the dip in Okta. All three indices finished the day relatively flat, only slightly below or above the flat line. The new jobless claims report hit the lowest pandemic era level at 406,000. The second estimate of Q1 GDP growth in the US came at around the same 6.4% as the last time it was reported, reiterating the economy is on its recovery track. Investors are waiting for core inflation and consumer spending reports coming out tomorrow to confirm whether inflation is as problematic as they think so. Looking at the winner's stock of the day, AMC continued to rally more than 35% today as Wall Street bets trader YOLOing their way to pump the stock up. As I scrolled through Reddit's Wall Street bet thread, I came across this one post claiming to have invested all his or her savings into AMC and asking for folks to wish him or her luck. The you only live once or YOLO strategy is the talk of the town these days. To be 100% transparent, I have invested $1,000 in AMC's stock at $15 per share, and I literally wrote stupidity as my strategy behind my entry. I just want to have a stake in some of the most exciting phenomenon on Wall Street. Getting back to more serious side of investing, Boeing shares were up more than 4%. Despite 737 challenges, airline customers need more planes, and when there are only two major aircraft manufacturers in the world, inevitably, Boeing would be a winner. As a reminder, I own a few Boeing shares and a put option at $205 per share, which I hope would expire at no cost to me. More plane orders are good news for Boeing and me alike. From the list of today's biggest losers, shares of Okta, OKTA, were down more than 9%. The company creates a platform that allows people to use single username and password to log into all their work-related systems. If you work for a big company, there are several systems you'd need to work with. From your email to your pay stub to IT services, each one is a different system you'd need to have a username and password for. Okta makes it easy for you to have one login credential and your IT department to give you access securely. The company released its latest earnings report, and the result was better than expected. Investors got spooked over the new bottom line forecast for the rest of the year that is dragged down by a recent acquisition. This is one of those moments when Wall Street penalized a stock for investing in its future. The new acquisition allows Okta to own its competitors and expand its market. Moreover, if you focus on the company's performance, you can see solid operations. Last quarter, Okta managed to retain 120% of its revenue, which means its customers stayed and paid up for more seats, products, and services. Okta's business model is already generating free cash flow, and analysts' price target is higher than the current price. While based on valuation metrics, such as price to sales or price to book value, the stock is overvalued, this is one stock to watch and consider for your portfolio. I own just a few shares, and I may add a few more at these prices. That's it for today. If you haven't already done so, you know what to do. Give a stock card a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock pick page on the stock card platform. Don't forget to sign up for a 14-day free trial and use promo code ROLLWITHOURCEO, all lowercase and in one word. And as always, help us grow the Stock Guardian community by sharing, liking, and subscribing to these daily market recap reports with your fellow investors. I'll see you tomorrow.